The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thank you to our hosts, great hosts starting off with John Logan, Larry Pesavento, then Tom O'Brien and Tommy. I come in 11 o'clock till noon, the Tiger Technicians Hour. I hope I can keep up that standard. And then, of course, this being Wednesday, you're going to go straight to Think or Swim, the swimming lesson. And then, of course, you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien back again, 3 o'clock till 5. So we've got a full house here. We're looking at the E-minis up 8.50 at 2074.50. And what I'd say to subscribers to my opening call this morning, based on my work, and I had actually in the interview with Tom yesterday, I said that I had my Chapman Wave Trin gauge flashing, and it suggested that there'll be a move of about 9 to 11 points in the E-minis, which should help the S&P cash and the Dow cash indexes to move higher this morning. And it could have already have started, I said. And if you look at the 100, if you're looking here, let me just go to, if you don't mind, just for the moment, I'm staying with the June contract. If you're looking at this June contract, oops, the wrong one. You're looking at the June contract right here. That's what we've seen from 2063.75 late yesterday afternoon. We've already run to the high today of 2084, and I would say that a 19-point gain certainly fulfills the Chapman Wave Trin gauge objective. So this is very interesting because a break into the 2085 area starts a leg F/B with a very good chance that we could go a little higher. See this gray line here? Let me just squeeze this. I've had this forever. And what it's done, let me see if I can squeeze it enough. No, I can't go back. All right. It was from way back. I had drawn this line in, and this line is at 2086. And it's been like a fulcrum. We've been up above it, made that Eiffel Tower reversal way back in the 18 area, plummeted down to the 2063, and now we're trying to get back to that level. So that's going to be very important. It doesn't matter whether you change to the latest contract, which will be September. It's the same principle. So let's get out of that, and let me show you a couple of other things here. We're talking about INDU. Let's go through the numbers. The Dow's up 71 at 17,746. I had a good question. The S&P, did we see a bottom on the 14th? That's yesterday. Now back to making new highs, wave 5 up in the Elliott wave. I'll talk about that in a moment. Let's just go through this in a very steady way. The W formation in the Dow, going back to the Dow now, it's still very positive. It's gone to a level of support that was really interesting because it came maybe a tad lower to the 17,331 level. That was the week of May the 20th. Then it rallied, didn't make a new recovery high. Now it's above the 9-period moving average. I'm gonna posit that if the Fed does nothing and the Brexit turns out to be something that the market feels it can deal with, then there's a really good chance that I'd say that my contention was between 17,400 and 17,200 in the Dow. That's going to be imperative. It just has to hold that level, preferably not even get down there unless it's a spike to the downside and then pop to the upside. That's number one. Number two, so we've gone down to the 17,590s, but this is very important. Look at the volatility index. The volatility index had a move that you would think going to 22.13, was it? 22.16 yesterday. You would think that at 22.16, the Dow really was testing the low 17,000s. So this is fear amongst fund managers and hedge funds to get in here, to get some kind of insurance. And that's all I think it is at this particular point, insurance. So I'll talk about that a little bit more later. What I want to do is to go through the numbers. So Dow has 17,800 right there, the 9-period exponential moving average. It's possible that we make a little arch formation there, and then we come back and spend the rest of the time between now and I'd say Tuesday, not Thursday when the election is or the vote is, but I'm talking about just have a kind of a little bit more to the upside, turn around and then do a lot of testing at 17,600. I would not be surprised if there's one more slide below it. But I think a chunk of the work has been done, the consolidation. Now, it could be wrong because there are a lot of people that are looking for a smash to. In fact, a lot of people are talking crash. I do not see crash material here at all. I could be very wrong. I just don't see it. Okay, not in my work. I do see the opposite. I see a spike to the upside. There's a possibility sometime this summer. All right, let's continue. The S&P, SPX.X. The S&P right now is up 8.36 at 2,083. 2,091 is the 9-period exponential moving average. I'll draw this in here as well. I don't see a V-shape yet, but the two fighting patterns that always occur. The one is the arch formation, and the other is either the cup or a V-shaped formation. And that V-shaped formation would say, we're not coming back down. In fact, the low that was made today will not be breached, and by Tuesday of next week, we could be at 2105. And that would say, wow, the market really is ignoring that whole European conflagration that could be occurring. So that's all I'm saying. We remain short at this particular time, and I haven't added to the shorts. I haven't turned around and gone long, and I'm just letting things play out. It's as simple as that. So S&P has 2091 as big resistance going into, look, options expiration tomorrow. What I'd say to my subscribers, this is going to be very interesting. Let me do this. So every day I send out to my opening call subscribers my Dow chart. I show this. In this case, I showed the arch formation. I showed that these parallel lines. Oh, I didn't correct that. Wait a minute. What happened here? Do I have the one with them all? Nope. Oh, I thought, yes, I did. Oh, there it is. So there's the dash line. And that dash line says that we've got three parallel lines. We've gone from one trading band to another trading band. A break into Dow 17,000 up here in the 17,000. I would put it at 850 area or a little higher. Would say, uh-oh, we're breaking out. Be real careful. This is going to be higher highs and higher lows rather than lower highs and lower lows. So I discussed a whole bunch of things. What we're looking for, the MACD is positive because it only just barely crossed negative, but the stochastic is negative. And that's saying to me, the weight of evidence says there should be a little bit more backing and filling. I showed the 120-minute chart with all the different things that we look at here. We hit the target area, which I had shown a little while back. And now we're bouncing. We're bouncing into this area. 17,728 is the 9-period exponential moving average. We've gone a little higher. And the next one is 17,770. So this is the bounce that I'm anticipating, and we'll see how that unfolds. Then we've got a couple of other things. And what I'll do is I'll come back and we'll talk about why I said that there should be upside action today. There were 4 prerequisites that were met. So as we're going on, I'm just going to say that the composite index is up 19. The VIX index is down under 20. It's at 19.39. I'll be right back. We'll go into this in greater detail.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and what we're looking at is the Dow's up 65, S&P's up 7. I want to get to the comp index is up 17, but I did want to show the QQQ series, which is trading at 108.90. Not great action, sideways action in the weekly chart. Monthly chart is kind of really struggling here, and I think that the IBB has been a big part of it. It's just been smashed from the 286 area down to 260, another 25-point drop, and I think that it is telling us that this is a very selective phase of the market right now, and that it's getting ready to demonstrate that there are other areas of importance that are going to be very critical. Most importantly, let me just do this because I'm going to go through them steadily here. This is the gold contract. Gold is down 2 at 1286. Now, what's really important about this is that this is a peak C. I'm calling it peak C, and I think gold is still going to go higher. But it's that oval pattern in the weekly chart, I believe, is not only current action. This is a leg A, gray A, because if it goes above, the continuous contract goes above 1308.30, it's going to start leg F / still A. But the weekly chart is very, the monthly, that's the weekly chart. The monthly chart is still very strong. What I've forgotten to do is to put in leg, body. Now you can get the sense of what I'm looking at. Body says that there should be a neckline, and then the head, and the beak comes all the way back again. So far, this is the pattern, and it's working out fine. If you look at the monthly chart of the Dow, it's the same thing. Chapman Wave stalk leg formation. Usually it's very bullish. I just don't want to get carried away here. But we are short the Dow in a couple of positions, waiting for either action to say we're out of the woods and now we're going to go back up. And that's the question that was asked earlier. Is the S&P going to make a leg, where did it go? SPX.X, is it going to make a wave 5? And that wave 5 will be in the monthly chart with a breakout above 2134.72. I say yes, but not just yet. All right? That's the way I'm saying it. Now let's go to, I just want to do IYT. IYT is the Transportation Index. Nice day today, but it's had a horrible action lately. And I was asked about XAL. That's the airline index is very disappointing. The AAL, I would not be going long just yet. We might get a trigger for a buy signal, but I think we do have to wait a little bit. JetBlue, I was asked about JBLU. I was just on them a couple of weeks ago. I always enjoy JetBlue. They don't make as many jokes as they used to, which is fine with me. Now the other thing is, so JBoo and XAL, we looked at. I just looked at all of those things, and I have to suggest that the transportation average is indicating to me that there's a little more room to the downside that we've got. Maybe it's time now more than price, because it certainly had a big smash. Then the question was, RV. I got an email. Dear Basil, summer is the season for road trips, and if you're looking to plan a vacation, you might want to consider your options on wheels. Numerous reports reveal that more and more Americans are hopping into camper trailers and mobile homes. I believe I showed that to my subscribers the other day. Their mobile home sales have been on a tear to the upside since exactly the low of March of 2009. And that to me is always a heads up. There's another one I'm going to mention on air because for 2 days now I've forgotten to put it into my newsletter. I did put other things about real estate. But what's really important is that there was an article in the Globe that said that I can't remember the name, the person who heads the, where do they have the auto show? At the World Trade Center. I think it's the World Trade Center. Well, they said, and this is a quote, you can quote it 3 times back. You can quote it in 1987. You can quote it in 1992, 1991, actually. You can quote it. It happens. Maybe it's the 4th time. The exact same quote by different people. I refuse to do anything to expand the trade center until we have another, and I can't remember whether it was 5,000, but whatever, it's usually 5,000, 3 to 5,000 hotel rooms. As long as I've been here in Boston, it just never fails to happen. So I'm suspecting that we're getting, same as Manhattan, Brooklyn, we are getting to the overbought section. I think 2017 is going to be something we have to watch for. A very critical year coming up, 2017, in the building industry. All right, so I've got a bunch of things out the way. Next question was OAS, which is OAS, and I'll get to it because it goes right to the crude oil that I want to talk about. OAS is Oasis Petroleum. Yeah, it's looking quite good. The weekly chart has made a leg E. It could be a peak E if there's no new recovery high above the 1154 high of last week. But the monthly chart is still terrible. So this is the start. And what I would say is, if you are in it, and Julie, this is a tough one. You didn't say whether you're in it or not. You just wanted an analysis. It's looking good. If you're in it, I would say $10.38 OAS, 10.38 up 10 cents. It could pull back a little bit, but it has to hold 950 to 930. If it breaks that, it's going to have time as well as price to the downside. If by Monday, not tomorrow, but by Monday, I'll give it 2 days, 2.5 days, it's able to hit the doji candle wick. The candle high. No, let's make it the candle open and close of 1078 and 1077 of the 9th of June. If it's able to even touch that by Monday, that's very positive, and I think it's going to go up higher. Meantime, if you are long, stay long. I would just be taking off a little bit if it had to pull back below 959. That's a lot of points. If it takes out today's low of 980, I would lighten up a little bit. Is it a buy? To tell you the truth, the way I see it, I think you're going to have a better opportunity than at 1043. So all I can say is I would wait. You maybe want to nibble here at 1043 and have a 20-cent stop. That's another way to do it. The weekly chart is still very good, but there are signs that I see that says could start to pull back a little bit over the next 3 to 5 sessions. Okay, I hope I answered that. Then the next question was the XOP. XOP is the Spider S&P natural oil and gas exploration. It's made a leg D, maybe a peak D in the weekly chart at 38.28 high. Right now it's 3 points low. It's 35.40, up 41 cents. It went to the 34.22 level yesterday, made a peak F top in the daily chart, and that down arrow says you need a little more time. So I'm just going to say it's exactly the same thing. The chart quite similar, actually. Different prices, similar charts. The one was in E, this is in D, but it's pretty much the same. This one is a little bit stronger. And what I would say is XOP is going to give me a lot of clues. If on Monday, this time, during my show, someone will remind me. If I look at XOP trading at 35.40, up 39 cents. If it is under 34, the timeout could last a couple of weeks. If it is above 36, only 50, let's call it 70 cents from here. If it goes 70 cents from this level higher, I'd say good. Nice action. I'm still not sure I'd actually buy it, but I don't think it's going to break down just yet. Let's go to the dollar DXY. Wow, that went quickly. The dollar is down 17 cents. It's in a trading band. But most importantly, let's look at the TLT. And the TLT is saying, I've made peak C, a leg C. I could make continue that up if I can go to 136.23 today. This is still a very positive chart at the moment. I'll be right back. Basil Chapman. Dow's up 59. S&P's up 6.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm just finishing this up. D, E, I guess it's an F and a G. I just got to check that I got that right. G. Mylan Labs, actually it's called Mylan NV. I just want to see if I got, yeah, it was a C. There's no question about that. But is that a D? I don't think so. 4473. Yeah, it is. Okay. So at 4508 MYL, I think that this This is a little more difficult, almost the same pattern in the daily and weekly charts, not the monthly so much as the ones that we just looked at. I would say that if you're in it, be real careful about, it's at 45.07, gap down and try to fill the gap. It has filled the gap today. But if it at 45.07, in the next 2 weeks, next week and a half, I would say, no, what's today? A week, going to Friday a week. If it is taken out at 43, I just step aside for a while on this stock. Be careful. But if you're looking to buy, I would just wait. I'd wait for a retest. And if it doesn't test and it's holding the 46 area, that's going to improve the weekly. You're only, 6 points off the most recent low, way more than that, 9 points off the high that was made. And I think that that's where I'd look at it to see if it could bounce. But the monthly chart says the 9-period moving average has been such a resistance that I'd just be real careful about this stock right now. Also, it's in the area that is one of the weakest. Now, let's do a couple of things. I want to go to the, have I left out anything? Crude oil. I did that in a way, but I didn't finish it as crude oil. Crude oil is at 48.58. I said that I thought that the 51.20s was kind of maybe the max. It went to 51.67, and I said that I believe that the 48s to 46s is going to be a containment area. I still feel that way for now, but here's the real kicker. Within the context of patterns, it's like all the ones we've just looked at. The weekly charts have completed a leg, they're in leg D or completing a leg D or an E, and that says that you've got to be a little bit careful. But that careful doesn't mean to say you get a sell signal, because the MACD and stochastic are still very good in crude oil. So my contention hasn't changed. The crude oil is still looking quite good. It could pull back. The USO, which is at 11.68, down 5 cents, and made a peak F top in the Chapman wave at the 20-period and 200-period moving average, gone under the 9-period moving average, gone under the 200 simple moving average. It does, on a daily basis, it looks kind of weak. On a weekly basis, it's holding very nicely, and the monthly looks terrible. Which takes me to the very next thing, which I'm going to do now, which is TRCCI. If you're looking at the commodity area, the Thomson Reuters Continuous Commodity Index monthly, this is with the Chapman wave notation. You've gone to a leg E in the weekly, and it's MACD is very strong. Stochastics at 94%. There are other indications that say, be a little careful. We could see some kind of a pullback. And if you're looking at wheat has pulled back from its peak E top, still leg C in the, probably peak C in the weekly. Corn went to a high of peak F, and it hasn't broken above it yet. That would be about 439 and a quarter in the continuous contract. Today's high is 439, missed it by a quarter. So this could be pulling back. I think that the commodities could be pulling back a little bit here, which says, and I've got to go to it, that the dollar, which is down 20 cents, is something to watch, because although it's trading in a band that is really quite narrow historically, between the 96 and the 90, say call it 93s over the past few weeks. What's really important about the dollar, if for any reason by next week, due to the Brexit, if it breaks into the 96.80s to the 97s, that monthly chart is going to improve tremendously. If it breaks down and goes into the 90s, as the British pound, BP and GB, Great British Pound, can't be GB. It has to be, BP, British Pound. And the BP doesn't break below the low that was made in April of 1.3850. In fact, it starts to rally and breaks above 1.4781 in just over a week's time. That's going to be positive for the British pound. If it breaks down, then I don't even see a support at 1.3850, because that British pound on the monthly basis could go to trough A, B, C. It could go to leg C, D to the downside. So this is a really important phase. And also market-wise, this is kind of a phase where politically, I've been asked about Trump. Where is he in my Chapman wave? And for about 2 weeks, I've been meaning to say that he has made a peak C, and there's a leg D to come. And there's no charting it. It's in my head. You want to chart it? You have to chart my head. I'm sorry. So that's all I can say. That the weekly chart, Trump is at peak C. Now let's go back to Scott in Safety Harbor. Scott, how are you?
Good. Amongst all the turmoil, I'm trying to maintain here. The company I'm looking at this morning is CX.
So
doesn't really give me any really good readings, but I just am going to base my wanting to get back in on it on the sheer fact that our infrastructure is just a complete mess, and if Trump does get in there, we're going to need a lot of concrete to build that wall.
Wait a minute. Hey, wait a minute. Am I hearing you talking long term and not an hour or 2 or 3 days?
Yes, sir. I'm actually thinking about something for more than a day. We're talking about. My wife said, "Is that? Are you now an investor?"
Yeah. Okay. Yeah, I have the same question. When one changes one's personality and you're trading trading style,
I'm trying to mellow out a little bit.
It usually takes a couple of turns to get it right. So I'm just going to say to you, CX, which is CMEX SA, a cement company, and I'm looking at this, and I would suggest to you be real careful here. I would prefer to be looking at, you could be right, but I would much prefer at $6.08. I'd rather be looking at it with a successful test of the 550s. That's the way I'm looking at it. That's number one. And number two is, if you are correct, you'll be correct because within a week, talking longer term now, I'm going to go to a week, let's call it on the 24th or whatever it is, Friday a week. If on Friday a week it has not broken below 550s, but in fact is above 634, I think you've got a winner. Absolutely. But my idea here is that if it's a starter position, I have no problem with it as a starter position. This isn't the real position, because the real position for me would be on a successful, the MACD and the weekly chart has to successfully retrace back up, and that'll only be able to do that if a CX can go from the 609 area to the 637, 643. I'd even have to say 650. Once it's in the 650s, I think you aren't home and dry, but you're at least you don't want to be drying too quickly if you've got concrete, right? So you want to just be a nice mix. But in the meantime, if it's a starter position, I have no problem. But it is, I think, a little early. That's all.
All right, Basil.
Okay. Well, good luck. I'm going to be following. I'm putting it down here. Scott CX at 6.8.
Now a long-term investor.
And a long-term, I'm putting LT, long-term investor. Okay, thanks for calling.
Thank you, Basil. Bye-bye.
We'll be back, folks. Dow's up 41, S&P's up 4. We'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Just a couple of quick questions. Let me get them out the way. FMC, which is FMC Core, I don't know what they do. As far as I can tell, it's holding very nicely at 49.03. The weekly chart looks like the magnet of 51.31 is really trying to attract it. It's at 49.03, up 89 cents on a day like this. That's good. Had a couple of weekdays, went down with the market. So the monthly chart is the one. It's in leg A. I'm going to suggest that buying it here, I think there's a little bit of a risk in that you've got yourself maybe a point and off, maybe even 2 points to the upside. But if it pulls back 2 points to the 47s, I think you could then actually go to the 46.78 to the 46 level. So you've got 3 points down, 2 points up. I'm going to say hold off. I think it's a nice looking chart based in Philly Specialty Chemicals, lithium. Oh, lithium, huh? Lithium is having a little bit of a move today. No, all right. So I'm just going to be, you know what? I don't know if you're in it. If you're looking to buy it, let me look at the weekly chart and show you something. The weekly chart is at a very nice move. The first time it's getting to the 200-period moving average since it broke down back on the week of the 29th of May. So this is a good sign. I suggest that it's going to be in a trading band. 51.31, it could even go to 52 on the upside over the next 3-4 weeks. But the most important thing is it needs to hold 45, so the downside. So what do you do right now? You know what? If you're prepared to take a chance that over the next week there isn't a major breakdown in the market, because this will suffer if there's a major breakdown, you could start a small position. I'll tell you what I prefer to do. If you can get the June, July, if you could get the August 50 call, 49.02, at 15 cents or less, 15 to 20 cents over the coming week, I think you've got yourself a really nice trade. And just rather than putting a lot of money up for the stock, that would be minimum. And I wouldn't get carried away. You don't have to buy 1,000 calls at 15 cents. You need to start a little position there, and that's going to give you a real good clue. So that's number one. Now, if you don't do options at all, what I would say to you is, if you have patience, I'd wait patiently just for a little bit of a pullback. You know, if there's a pullback of a point and you're looking longer term, and this does look like it wants to move higher intermediate term, I'm going to suggest to you you could start a very small nibble position right now at 48.99 because it's going to give you a lot of information. But even the nibbling position, I would put a stop under the low of yesterday of 47.62. So it's $1.30 risk. I think it's worth it. It's acting pretty darn well. And the weekly chart is looking darn good. So that's the way I'm looking at it. Now, let's go to a couple of things. So I think I finished at MYL. Just to be sure, Let me say what time here. So I believe Yellen is, I'm not the one. I had a question about Yellen. I think it's at 2 o'clock, and I'm not sure there's any statement at 2:30. So, in fact, I thought they were going to say nothing. I said to subscribers, they're doing nothing. I was going to have an update, and I thought, hey, why bother? It doesn't matter. I don't need an update. We're in positions. Our positions are either going to work beautifully or they're going to be taken out. I don't really care because we're much lighter than ever before. We're lightly in the market, mostly in short positions. We'll see what happens. And they still seem to be working. That's fine. And the long positions are doing very nicely as well. So I'm not complaining. So let me do this. Here's a question on the 10-year TNX. The 10-year has just made a turnaround to the upside. But this to me is not right. Because if I'm looking at the TLT, whoa, look at that. 136.22, 136.23. It extended leg C. If I'm correct in my notation here in the Chapman wave methodology, because, I really have to say, there's A, B, C. There's no way that this could be an alternate. I shouldn't say there's no way. This could be an alternate count F/C, but not with the MACD so strong in the stochastic at 93.95. I don't think the Fed's going to do anything. Oh, they might warn a little bit about July. I just don't think there's going to be anything newsworthy. And what, with the Brexit coming up, they're going to make some kind of statement. I think it's just wishy-washy. I think bonds go a little lower. And let me get out of this, and I'll show you something very interesting here. Look at this. Close workspace. Yes to all. Add workspace. And that'll be the long-term chart. Look at this. This is the 30-year, 10-year, and 5-year yields. And look what happened. We went to a lower low yesterday, and we were at 24.03. 24.09 is the level to watch on Friday at 4 o'clock. Because if we close above it, next week at some point we could see a little bounce in yields and bonds pull back. But at this particular point, we haven't gone to lower lows in the 10-year T-note yield or the 5-year. They've got a long way to go. 10.08. The 5-year yield has to go to, and it's 11.17. In other words, 1.008, and it's at 1.117. So I think that we're going to get some test of the lows there. So that's what I'm looking at there. So GT says 10-year T-note best first half of the year since 2010. Does this mean the S&P? Does this mean that the S&P might remain weak until year end? I don't think so. The way I'm looking at this market, I think there's a surprise to the upside. Hey, I could be wrong about this, believe me, but there is so much nervousness. How could the VIX skyrocket into the 20? Look at this, the VIX index in leg D. It goes to 22.16, and now we're pulling back. That's what you expect from a peak D, which is what we're getting today. And leg C in the weekly chart, and it often goes to C and fails. So I'm just saying, you know what? We could go into a holding position now. A lot of work has been done. Oh, a question about the XLF. The XLF, that was a much deeper slide. We were long. We took profits. It hit 23.93 peak E, and then it pulls back sharply. It's in trough A, B, C. Trough C, I would say to you, based on the weekly chart, that the financials are saying to me that at this particular stage, they haven't broken out to the upside into the 24s and held in the 24s. Instead, here they are in the 2280s. The way it's looking, I think that the financials have a difficult time for the next, at least the next week. All right? So I covered that, I covered that. And I also had a couple of things I wanted to do. It was independence. Yes, Amazon, AMZN. Look at this. It went to a peak B, pulls back, and then it goes to a C, makes its D with a doji high, and I have to put a down arrow because the MACD is very weak and the stochastic is way under 80%, and it closed twice underneath the 9-period, 3 times under the 9-period moving average. Can it bounce again? Yep, it could. But I have to tell you, it's a leg D in the weekly. So the way I'm looking at this, there are a lot of signs that say maybe this consolidation needs to go on just a little bit longer, maybe into next week. I just don't see the big smash that a lot of people are talking about. Question about can I look at X if you haven't already? I haven't already. I'll try to get to it if I have a chance when I get back. This is Basil Chapman, Tiger Technicians out. Check my opening call. That's my newsletter. It is really comprehensive, and we've been doing pretty nicely. So, and here's the overview section. This is what I show every day. Actually, I'll talk about that as well. All the different signals we got for a little bit of a rally today, and then a failure maybe later. I'll be back. Dow's up 40. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're back. A whole bunch of questions. Paul sent a really nice, quick email to say, check out Walmart. Seems to be breaking out. Well, oops, wrong chart. Let me go to there, 16. I keep putting in the June contract because we can still trade it, at least for today, but we're going to be out of that. So Walmart, having trouble. Okay. So look at Walmart. Nice action. I wouldn't call it breaking out. It's up 50 cents, but that island reversal, yeah, that's the price. It hit it just for one day, plop, and then pop. And that's an island, perfect example of an island reversal, a huge island reversal one day. I think that Walmart's acting well on a shorter-term basis. The monthly chart is still in a recovery leg A. It's taken a long time to recover from that horrible smash to the downside that started last August. But it is way under the 90.97 high and is way off the 56 low. So I'm saying that Walmart's acting quite well. If Walmart could, I think it's in a trading band. and I wouldn't be surprised if it goes to the 71.80 area. Then it pulls back and gets to the 70.60, 70.23, and then it kind of messes around there for a little while before it actually breaks either upside or it takes out the 67.50 area, and that's it. It's on its way back down again. So right now, and I've got a down arrow and up arrow. I don't really have a choice because there aren't enough letters once you get to a B. It doesn't go F, G, H. There's no H. So this has to be a peak B, a leg B, maybe a peak B by tomorrow. But in the meantime, it could be in a range. So yes, it's acting quite well. Would I buy it? I don't see that much upside at the moment, but maybe there's a dividend play. So anyway, I just wanted to show that. Good question. Then a question about U.S. Steel X trading up $1.48 to 17.81. Yep, nice move today. And in fact, at 17.93, if it gets there, it starts a leg C in the daily. Acting quite well, but it has been vulnerable to some of the market declines. So I'm just going to say, if you're long, great. I would put a stop, more intermediate term stop. It's at 1782. I'd put a stop in under yesterday's low of 16.02 of at least some of my position, just to be careful. But in the meantime, it's acting pretty well. Now, what I wanted to do is also looking at, there was a question that I was going to deal with. We did the yields. Oh, that's right. I wanted to also look at the SMHs. The SMHs are down. It's the semiconductor, the market vector semiconductor, and it's down. It's up 10 cents. It's down from the high of the day. It's at 56.49. What I think is really important about this is it's at peak C in the weekly chart. Well, I could make a case that maybe it is a D, but I'm going to keep it at C right now in the Chapman Wave methodology because it's held so well. But I can just tell you this, that if the market is going to really plunge, you will see this break 55.80 support, and it's at 56.50, so that's only 70 cents lower. If it does that, then it could go very quickly to the 55.54 area, and that's going to be a big tell for me as well, because if the semiconductors holds very nicely here, that's going to be important. So we're about to wrap up, and I'm going to do this as a wrap-up for the day. The VIX index, after 2 o'clock, I will have no update for my subscribers. We're in positions, that's fine. The VIX is at 1955. If at 2, any time after the announcement or whatever it is they say at 2 o'clock, if at 2:35 to 2:45, the volatility index is above 21 and holding or makes a breakout above 22.16, this market's down triple digits. However, if there's some way of ameliorating any weakness and the VIX starts to fall under 19, and the Dow suddenly pops to 17,780s, that's going to be good action. That's going to give a nice base of support for the next few days going into that Brexit meeting. So that's what I'm looking at. In the meantime, back at the ranch, have a great day, and stay tuned for your swimming lesson and all the other classes. And I will be back tomorrow. Have a great afternoon. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.